Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a very common question we receive regarding the reporting of retirement or pension accounts, and specifically the difference between reporting a foreign pension, such as like a CPF or an Australian super, versus reporting a U.S. retirement account like an IRA that may have some foreign pooled funds within it. So let's go through the basics. We're talking today specifically about the FBAR foreign bank and financial account reporting more than just bank accounts. Technically, it's filed on FinCEN Form 114, filed electronically. It's due on April 15th, but it's currently on automatic extension, so you have until October. When it comes to reporting the FBAR, it's much more than just your bank accounts. It's investment accounts, pooled fund accounts, stock accounts, pension accounts, life insurance, etc., etc. And so the focus for today's presentation is regarding retirement accounts. So let's start with the U.S. type of retirement account that may have foreign accounts in it. So you have an IRA, okay? And that IRA has some foreign mutual funds in it. Maybe you've got an IRA with some Vanguard in it, and you've got some foreign mutual funds, okay? If you're in like a qualified type of if you're in a qualified type of U.S. retirement account, and then you have foreign accounts or pooled funds within it, then you do not have to segregate those foreign accounts and assets in order to report them separately from your qualified retirement plan. That's very important. There was some kind of, I don't want to say bad information online, but there was prior versions of the IRS publications made it sound like any retirement plan wasn't reportable. Excuse me. But that's not true. What they're saying is if you're in a qualified type of U.S. retirement account or retirement plan, and you've got some foreign assets within that plan, then you do not need to parse or segregate those out to report them separately on the FBAR. That is not the same as having a foreign retirement account. For example, you're a U.S. person and you have a Central Provident Fund in Singapore, Mandatory Provident Fund in Hong Kong, and EPF in Malaysia. Maybe you've got pension plans in the UK and a superannuation in Australia. These are all retirement accounts that are foreign, and therefore they are considered the type of financial account that has to be reported. This is set forth specifically in the updated version of the IRS guidance publication 5569. I believe it was published in February or March of 2022. Also includes things like RISPs and RIFs over in Canada. So the main takeaway from this short presentation is if you have a U.S. retirement account or plan that may have some foreign assets in it, generally you don't have to segregate those assets and report them specifically on the FBAR. Conversely, if you have foreign pension plans, foreign retirement accounts, those have to be reported on the FBAR. This is a common misunderstanding. They don't make it very easy. Right? What do they ever make easy? But if you're out of compliance, don't get concerned. Don't get too worried. There are many different offshore amnesty programs that you can submit to in order to get into compliance. If you are willful, there's only one program, that's VDP, the Voluntary Disclosure Program. If you're non-willful, there's many options available. There are the streamlined filing compliance procedures, which is broken down further into the streamlined domestic offshore and streamlined foreign offshore. There's also the delinquency procedures and reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.